Welcome back to the Diamond K Show here on Radio on Fire. Thank you for joining me. As our coverage of the coronavirus, the pandemic, continues, because we are not at the end by far, I wanted to really take this episode to take a look at some of the American brands. Some of the American brands that are going to be affected by this coronavirus. We want to list 22 American companies that may not survive this pandemic. Okay? I mean, businesses of all sizes in America are facing this unprecedented crisis as a result of this pandemic. The Chamber of Commerce found that 43% of small businesses believe that they will not survive 6 months inside these economic conditions. Now, large businesses it's a mixed bag. Some have a lot of cash and are able to weather the long-term financial downturn, while other major American brands are saddled with debt, massive debt. And without a significant change in conditions business-wise, may be forced to close their doors forever. So every business has been affected by this pandemic. Some industries have suffered greater, and the brick-and-mortar retailers, theaters, companies that rely on live events have seen revenue decline in the wake of this COVID-19 pandemic. So you've heard about it. We've talked about it. Number one on this list is Neiman Marcus. This is a luxury goods brand. Everybody knows the department store chain. The department store chain filed for Chapter 11 bankruptcy earlier this month in an attempt to restructure the debt and survive these harsh economic times created by COVID-19. The company had been saddled with $4 billion in debt since 2013. And, I don't know whether or not Neiman Marcus is going to make it. High-end, brand. Number two on this list, StubHub. So, of course, their industry is ticketing for live events. And with virtually all live events canceled or bare minimum postponed until the foreseeable future, ticket exchange and sale company StubHub is facing an unprecedented situation. It has updated its refund policy as more than 20,000 events have been canceled. 20,000. And the company is unable to take the risk of giving refunds to buyers before recouping the same refund from the seller. So the lawsuits from fans who say that they never got back their refunds, despite the NBA, the NHL, and the MLB postponing their seasons, and despite the company's own refund policy, is really something that has the StubHub brand in major trouble. Number three on this list, JCPenney. Industries, a retailer, it's a brick and mortar business. It's usually an anchor for a mall. Malls are in trouble, but this is an anchor store, and JCPenney has multi-billion-dollar debts. Combined with the chain closing most of its stores nationwide because of COVID-19, they were already in trouble. Okay, the company's future is in doubt. JCPenney is reportedly considering bankruptcy, and it recently said it did not want to make the $12 million interest payment that was due. So, JCPenney in trouble. If you're just tuning in, it's the Don McKay Show here on Radio on Fire, of course. I am on social media at the Don McKay Show, at Radio on Fire. So continuing with this list, AMC theaters. Of course, it's the theater industry, which has not been opened. The movie chain was reportedly close to filing bankruptcy last month, but was looking at raising $500 million through a private placement debt offering. This may have pushed back the bankruptcy option for a time being. Now, some states have allowed movie theaters to open at reduced capacity, but AMC is not anticipating on opening until the end of June at the earliest. The company closed all theaters back in March, of course, because of the COVID-19, and they furloughed or laid off 26,000 employees. No ticket sales. They have not been paying rent since April. One interesting turn of events is that there are rumors that Amazon is considering or trying to buy AMC. So that's interesting. So we'll talk about that in later on. Number 5 on this list is Sears, the department store chain, very similar to JCPenney's, an anchor store. It's been in trouble. It's an American icon store. However, it has struggled for years. Okay, since back in at least 2010. 2010 was the last profitable year for Sears. And the retailer reportedly has losses of $12 billion. They filed for bankruptcy back in 2018. And they continued to shrink operations and restructured its debt, closing another 100 plus stores and staying with just under 200 stores nationwide. A fraction of the over 3,000 that it operated not that long ago. So Sears is in significant trouble. Number 6 on this list, WeWork, which is the real estate industry. The new social distancing requirements might remain in place for some time, and that could spell the end for co-working spaces. You know what I mean? Co-working spaces, particularly WeWork. The company's occupancy dropped by nearly 2/3 in April. WeWork stopped paying its rent last month and is reportedly negotiating new leases. So they're in trouble. Number 7 on this list, J. Crew clothing store. Weeks after closing its doors back in the middle of March, J. Crew filed for bankruptcy. The company also said that it reached an agreement with its lenders to convert more than $1.6 billion of the company's debt into equity. J. Crew also secured $400 million by way of a loan, and though it is increasingly difficult for the company to pay back that money, its credit rating has been lowered. The company is also planning for an IPO early in 2020, but those plans have been put on hold due to this. J. Crew is in a lot of trouble. And Frontier Communications, the communication industry, telecommunications to be more specific, they have been burdened with debt, and it's significant, $17 billion. So a lot of these companies that are on the chopping block were already having issues, and Frontier Communications is one of those industries. Bed Bath and Beyond, number 9 on our list, is of course they sell soaps and toiletries and other things, but they have been in high demand. But many of the company's products have likely not sold that well. Okay, the company struggled ahead of the pandemic. Anyway, as I said, by many of the stores and the brands that are on this list, they were already in trouble. And as of May 8th, stores remain closed. Most of Bed Bath & Beyond's workers have been, on leave since early April. And the stock, it's just a mess. Hertz, car rental company, non-essential travel has all but canceled. A lot of people don't think about companies like this, but a car rental company like Hertz is struggling because of the lack of income. The car rental giant had reached an agreement with some of its lenders that gave them until close to the end of May to develop some type of a financial strategy and a structure that reflected the pandemic. The company said that it had a plan to cut nearly 10,000 jobs, but they still failed to make some of their lease payments. So we don't know what's going to happen with number 10 on our list, which is Hertz.
Do you have a business, product, or event that you need to promote to men and women ages 23 to 44? If so, Radio on Fire can help you do it with one of our promo packages. Our broadcasts reach over 150,000 people per month. Sponsorship for one or all of our radio programs can include live mentions, social media posting, commercials, and more. Visit radioonfire.com/advertise to find out more about a promo package that fits your needs. Rates start as low as $50. If you want to reach men and women ages 23 to 44, log on now. radioonfire.com.
Steak and Shake, the restaurant chain, just before the shutdown, they were already closing restaurants. They were facing declining sales. The burger chain temporarily closed 100 stores in February to convert them to counter-only service restaurants to save on labor costs associated with having a wait staff. The company reportedly lost $18 million last year. So bankruptcy is a risk because of its restaurant closures. They have a low cash flow as well as just the struggle of their business. So this is definitely a business to watch. Number 12 on this list, Nordstrom's clothing industry. Like many retailers, the department store chain Nordstrom's has been in trouble. And the nationwide shutdown of non-essential businesses and all of its physical stores being closed, the majority of its workforce laid off, they are in what we call major trouble. Number 13, GNC, the health and fitness products company. Now, even though food has been in high demand during this pandemic, nutrition-related product seller GNC has not been able to capitalize off anything based on what they already sell. I mean, it relies heavy on in-person sales and not online sales. So they have laid off a significant portion of its 12,000 employees. The company's credit rating also recently downgraded. They're in trouble. I mean, when you have a business that is based predominantly on in-person sales in 2020, you may have some trouble. Number 14 on this list, Ruby Tuesday, the restaurant chain, casual dining. But they had been struggling long before the COVID-19 pandemic surfaced. They had been closing temporarily a lot of their restaurants, and their national presence has been declining over the years. They had 945 stores back in 2007. Now they have a little bit less than 500 nationwide. As the lockdown continues, already a number of their stores have announced that they will not be reopening. And something else, another business is based on in-person The fitness industry, Gold's Gym in trouble. The ban on crowds of more than 10 people across the nation spelled disaster for a local chain, a large chain like Gold's Gym. They filed for bankruptcy earlier this month, and pledged that the Gold's Gym would reopen, but it already had to permanently close 30 company-owned locations amid this pandemic. Gold's Gym really being decimated right now. The energy brand Chesapeake, they are in trouble. The global oil industry has been devastated by this. I mean, less people are needing oil. And there's a price war between Russia and Saudi Arabia that is affecting prices. And so the price of the West Texas oil futures fell far below zero for the first time. And a number of smaller oil operations are at risk of going under. Even some of the larger energy companies are in trouble. Speaking of an industry that's in trouble, the travel industry, cruise industry, more specifically Norwegian Cruise Line, in trouble. They are headquartered in Miami, for those that did not know. And I mean, just the cruise industry has taken a beating since the Grand Princess cruise ship became that hub for an outbreak back in February. I don't see a lot of people cruising anytime soon. Number 18 on this list, Dave & Buster's. Now, unlike many other businesses that offer food, Dave & Buster's relies on customers coming in and paying for arcade games, right? Now, I mean, it's other amusement there, but it's mostly based on that. And this accounts for 60% of the restaurant company's revenue. So when you take that part away, the company is in major trouble. Even when locations begin to reopen, customers may be hesitant to come and play games that other people have touched. So they have laid off 15,000 of employees. They haven't paid rent, and the company's stock price is dropping, and they're in trouble. They're in trouble. They sold $100 million in stock to Jeffries LLC, and that's definitely Dave & Buster's, someplace that we're going to need to watch and see what happens there. Number 19 on this list, Party City, right? Party City is it's one of those places. It's an in-person thing, and with in-person events being canceled, this is a time where people are having parties and graduations, etc., etc. None of that's happening. Party City's potential earnings have all but evaporated since this pandemic hit. Their stock prices have gone down. The party supplies manufacturers laid off 90% of its workers, 70% of the manufacturing and corporate employees. And as of now, the retail stores, all of them, closed. And there's no word when they might reopen. Some locations are offering curbside pickup, but that company is in trouble. Modell's Sporting Goods, they are in trouble, and they were already in trouble. They're already gone. You know what I mean? It's stores that they've been closing up, and more than a century in business. They announced in March that they were filing for bankruptcy, and all stores for the Modell's company is gone. Okay. But because of the pandemic, it may actually keep Modell's open a little bit longer, and it's been halting its liquidation amid the closure of non-essential businesses. But that's only postponing what's going to happen with that brand. Number 21, and I don't know if this is a surprise to you or not, but that is Best Buy. So the consumer electronics giant Best Buy is one of the many brick-and-mortar chains that are facing bankruptcy. The company reportedly had a surge in home appliances, freezers, and the such at the beginning of the outbreak, but it is in trouble. Okay. They laid off 51,000 employees, and they have cut executive pay, did away with benefits for employees. They're in trouble. Last on this list is Revlon, the cosmetic company Revlon. It's a New York-based company, and they were already in trouble. Okay, so a lot of debt, a lot of layoffs, and most Americans being confined to their home. Last thing they're thinking about is cosmetics. So as this continues to go on, I'm going to keep you up to date here. Let me know your thoughts in the comment section, Instagram, Facebook, Twitter, at The Diamond K Show, at Radio on Fire.